Panda Anthem.
Ian, what's up?
Red Panda Anthem.
Red Panda, what's good?
Red Panda Anthem.
Let's talk about this. Netflix. We talked about this on the show on Saturday, but we didn't get a chance to talk about it last week because it happened after the show, after last Monday. But Netflix fell apart, down 37% since January. One day last week it was down $125 for the day. Bad report as far as people leaving. What's the numbers?
It was 500,000 they reported. They lost 500,000 subscribers.
Negative growth.
Yeah, first time in over 10 years that they had a negative subscriber growth.
All right, so let's talk about Disney, Roku, but first let's talk about Netflix. Netflix is Netflix officially dead? You know, Netflix is one of the two companies that Mark Cuban said he owned. When Mark Cuban was on Market Mondays,
gotta give my guy a call.
Yeah, he said he owned two stocks and two indexes. The indexes was, I think, the S&P and the Russell 2000. And he said the stocks that he owned was Netflix and was it Microsoft?
I think it's Amazon.
Amazon.
Yeah.
Well,
you're going to have to do what Bill Ackman did and cut. Listen, let's give Bill credit.
Ooh, lost 400.
It's a good lesson, though. When you have a loss that is that considerable, you may wait and pray that it'll go up, but you have to cut your losses and just take the haircut and be like, okay, I won't make the mistake again. He just invested at the wrong time. That goes back to having to deploy capital. Had to put the money to work. He took the loss. Now, I mean, I wanted the price that I said that we were going to fall to. Kudos to you to execute and make money on it. Netflix is at what, 209 now? I mean, they may clip 180. I don't like Netflix at all. I think Roku is going to be in trouble. They won't hemorrhage as much money, but that entire space, and I talked about it Saturday. I won't tell too much to everyone who was there, but a formula that I try to stay away from is a business that has high debt and a low subscription or low product price model. So if you have, I mean, Troy said it, they're paying $30 million a show for Stranger Things. Great show, not worth 30 a show.
Mm-mm.
And I want you guys to do this. For $240 million, how many subscriptions at $9 do you have to sell to break even? That risk to reward ratio goes in every business decision. That's why I say it's the ultimate indicator.
Yeah.
So if I'm putting $1 in, worst case scenario, I need to get $5 back. But if you're running negative, they have a negative risk to reward model. And here's the funny thing. I was reading a report. They said for any decision underneath, for everyone in corporate, listen up. For every decision underneath $10 million, they did not have to report it to anybody in the C-suite. I said, damn, this is corporate death row. You can do whatever the hell you wanted to. You can greenlight anything for less than 10 million. You don't think that they were having their friends and PAs and grips coming and just helping their friends make all this money? Now, even with House of Cards, as great of a show as it was, you have one risk, Kevin Spacey, which he's been trouble forever. Now you can't even have that show. You cannot have exorbitant costs and sell at a low price and have high debt. This is the same thing that killed Blockbuster. And isn't it ironic going into this next recession? The same thing that killed their competitor is going to end up killing them. Netflix is dead.
The signal has been going out.
Yeah.
Netflix, they're in trouble. Shout out to YouTube, 7,100 people.
Yeah.
Hit the like button, share. Netflix is definitely in trouble. And, it's so crazy because before we had Earn Your Leisure, I used to do these posts on social media where it was like kind of like mini articles. And one of the articles that I had was, could Amazon be the death of Netflix? And that's when,
from a streaming standpoint.
Yeah,
Okay.
in the Amazon Prime situation. But we also doing Disney, because that's when Disney had first announced that they was going to have this streaming. They have competition issues. They have people stealing, piracy issues. They have, like Ian said, low profit margins, high debt, very competitive space. They have a number of things that are working against them.
Mm-hmm.
A number of things that are working against them. And they're still the biggest in the space.
For now.
But I'm saying now.
Yeah.
They're still the biggest in the space. But it's an uphill battle. Looks like they're You know, they've been counted out before. But
I've been saying from day one, there isn't any business, Sears, Kmart, Venture, Toys R Us. There is no, and please write this down. A sign of a recession. Anytime you see 40 companies go out of business because of bankruptcy, that is a signal. So I never worry about the big companies because they'll find ways to find capital, right? I worried about the small places, Pier 1, Bed Bath & Beyond. When Best Buy was on the ropes and they made a hell of a recovery. You have to look at those companies and see how well they're doing because the top 5 companies are always going to be great, top 15. I'm looking at 80 through 200 and see how well they're doing.
Yeah.
They've been counted out before, but they haven't had this level of debt. Even when we were riding back Saturday in Houston, the streets are a lot lighter than they used to be. A lot lighter. People are spending a lot less. PPP dried up. I won't go into my little conspiracy theory about Wells Fargo and how they help fund the credit card scam industry. There's a lot less of that going on too, though.
So the man did, right? Yeah.
So money is drier. I like Netflix if it gets to $99 and 22 cents or $70 and 19. I'll sell everything, get it at $70. But anything above 149 would not touch. Dead man walking.
Yeah, they're gonna have to figure out how to expand. I mean, they got to figure out how to generate revenue. And so one of the things we spoke about this over the summer, they announced that licensing deal with Walmart where they're going to put some of the licensing from their shows, but they don't have enough original content where it could be sustainable. And so that demographic that they're trying to reach with Stranger Things is already taken, right? Like Disney owns the youth, YouTube owns the youth. Like we talk about that all the time. And I think we had this conversation, right? If we're talking about streaming and we're talking about services, the one who set up the best is really Google because they don't pay anything for content. People put content on their platform every day
here's the
free.
Here's the thing with Google.
Let me just finish this. So they put it on there for free, and they're gonna have content continuously every single day of every year, right? And so if you take that compared to a company that has to buy content, let alone they're going to be in debt for that, let alone they have to spread internationally, which is also going to cost them. They have to have the infrastructure to be an international presence. They haven't done that yet. Right. And so the revenue from, let's say, you're paying $30 million to have per episode for a season. You're talking about $300 million. Yeah, you might be able to sell some merchandise for that, but nobody's buying Better Call Saul merchandise.
Facts.
Nobody's buying Narcos t-shirts. Like it's not happening.
Well, here's some information about Google. YouTube will be moving heavily into podcast space.
That's a fact.
Heavily.
Yeah, I told you guys that 4 weeks ago. Hey, can I be real? So, shout out to my people at Google. This is why culture is important. All they did was take that PIF model and made all of us mixtape rappers.
Well, yeah, that, and then once they get heavily into podcast space, now they really have no competition if you think about it, because Apple is the leader in podcasting in America, but they have competition. There's a bunch of other audio podcasts, Spotify being the other biggest, but then there's like Podbean, there's Sketcher, and there's all kinds of different stuff. Yeah. From a visual standpoint, they tried to take that, but it didn't work out as far as with Spotify. But really, when you look at a visual, which a lot of people watch podcasts visually, they don't even listen to podcasts. YouTube is already. They have no competition in the space. So once they really start to really pile more money into the podcast space, they're already in a unique advantage to really, corner the market.
Yeah, and which demographic don't they control? They get a new subscriber every day, and a lot of times they're young. Kids are on YouTube. Our kids, like we know, our kids don't watch. They don't have a favorite show that's on traditional TV. Yeah. Their shows and their influences are coming from YouTube, so their audience is already built in. And I told you, when you have children, right? Either you're going to have them watching Disney, or you're going to have them watching on YouTube, watching the ABCs or something like that on YouTube, right? So it makes sense. Like their demographic is already built in. They're going to get a newer, younger audience every single day. How do you compete with that when you have to pay for content and try to attract an audience? It's,
And
it's a completely
the
different
thing.
model.
And look at all the people from the music business that were executives that Dane would call vultures that they then acquired. Now, because they know since culturally we like to be seen opposed to being paid, they are going to be the biggest, and I can argue now they already are. They are the biggest record label in the world. And if you think Spotify doesn't pay anything, YouTube pays even less. And when now you're the only platform that really matters, watch how much they're going to take, and then it's only going to help their business even more.
Yeah. I mean, what's their biggest expense besides infrastructure within? As far as when we talk about YouTube,
Maybe talent, but other than infrastructure and actually equipment,
right?
Think about the risk. Everyone else is uploading the content for them. As like,
Right.
Imagine if Def Jam got, shout out to my Def Jam family, 200,000 people a day to put up content, and they just said, "Hey, pay me whenever you want, whatever rate you feel."
Or how about you guys tell me what's hot?
It is there's no capital expenditure on the outfront for them. That's why I always say business model matters and even for me personally, I know some people don't like premium. Man, I feel you. But Netflix, any low profit margin or low price business is the most ripe for disruption. And on top of that, they end up going bankrupt a lot faster. All the quality companies that you guys love are premium brands. Name them. No one ever be like, yo, I love Payless. Like all the Balenciagas look like old Skechers. But somehow when Balenciaga on them, they mean and it's worth more. We are entering an era where low price businesses and mid-tier businesses are going to fall apart. And I would not even be surprised if Google and Apple acquires a couple of these other smaller podcast players. And I wouldn't even be surprised if Google or Walmart pushes to acquire Netflix too.
Mm-hmm.
Yeah, man.
You know why? They got an economic moat.
Yep.
All pun intended. Shout out to everybody that was in attendance Saturday.
MVP. Listen, I wish you can get out tonight.
We can't. Some things are just left to be seen in person.
This that Red Panda anthem.
Ian, what's up?
This that Red Panda anthem.
Red Panda,
This
what's
that
good?
Red Panda anthem.
Your
Whole
boy.
foot going up. I know they can't stand it.